The IG report from Melbourne. Interesting trade again overnight in the US. We're continuing to see fairly choppy trade coming out from those bottom-up views. Again, US earnings season continues to roll along at a fairly reasonable pace, but it certainly isn't shooting the lights out as some had hoped. In saying that, we have seen some fairly volatile moves on that as well, and that's probably why the choppy trade continues to move through. Overnight, well actually this morning in early trade, after an hour trading in New York, we saw Amazon actually coming out with a surprise net loss around about 2 cents per share or $7 million. But in the same line, they also turned out and said a 22% increase in the revenue line up to around about $1.67 billion. Now, that's a very interesting situation for them to be in. It again gets back to the fact that we are seeing a lot of structural changes across the US earnings corporates as they try to extract better earnings and also better sales. And it comes back to the results that we've seen so far. 70% have beaten on the revenue line of the about 227 companies that have already reported, whereas only 51% have beaten on the sales line. And that does suggest that the way they're extracting that better revenue is coming down to cost restructuring and making sure they streamline their business as well as they possibly can. The other thing that came out of the US last night was again that the jobless claims numbers for the week were a little bit sort of on the upside. Another additional 7,000 job benefits rose from the week before to around about 343,000 job claims. And that is what we probably will expect over the next 3 or 4 months. We do know that the US economy is getting stronger, and that will probably bring a lot of people that have actually fallen out of the system back in. And that may actually therefore see the unemployment rate continuing to sort of hold above that 7% mark, and therefore maybe, and it is a may, hold the sort of the Fed tapering talk a little bit further again. Durable goods were also out last night. Headline figures suggested they were actually quite good. They weren't actually all that good at all. If you take out the automobile side of things, it really was quite weak, and it actually came in at dead even, with most people expecting it to increase by about half to even as much as 0.6%. So it does suggest that the data is going to remain choppy, and that's why we saw US trade last night being quite choppy. Another interesting thing that came out overnight is that China has now decided to really clamp down on overcapacity. About 1,400 companies are going to be affected by this across 19 different industries, and they are really trying to remove any form of oversupply in the country, particularly things like steel making, aluminium, copper smeltering, also things like cement production and also paper making. They're the main ones that are going to be really squeezed out, and from an Australian-centric point of view, that does have ramifications. We do see already that there's about 7 million tonnes of excess steel production in China and about 92 million tonnes of excess cement made in China as well. If you look at those materials plays, they may be affected by this news, and we may see imports over the next 6 or 7 months sort of coming down as they sort of want to be idle by September and completely eliminating all that oversupply by the end of this year. So it will mean we might see that filtering through. And in considering we saw some fairly flat and very flat numbers from HSB Flash PMI on Tuesday at 47.7, you can actually see that already happening as well. Moving to the ASX, the ASX looks like matching down around about 5 points, which is pretty low, to about 53.31. In saying that, we are due for a rest day. We've had a very strong uptrend. We're up around about 408 points since the June 25 low, and for that reason, you may actually see a little bit more of a pullback than what we've predicted. It also is the end of the week, and a lot of people will be closing out. It's probably going to come from the cyclical plays. We can see BHP's ADR coming off roughly around about sort of 44 cents, down about 0.9% to 34.44. BHP's done very well over the last 3 or 4 weeks. It's up roughly around about 12.5%, so a pullback is also healthy for it, despite the fact that iron ore is continuing to remain very high, above 130 US a tonne at 132.1 US a tonne at current prices. It's a pretty good price to be at, but in saying that, BHP is also due a bit of a pullback. So watch that today. It'll be a fairly interesting and fairly subdued trading session over the weekend. There's no major macro news, and for that reason, it should be a relatively soft day.